Pakistan's economy is going through the tough times. New government inherited an economy with a huge debt, and they are struggling to sort out the issues. Currency is going through the rapid devaluation, while almost 35 rupees currency devalued against the US dollar. At the same time, central bank is also going through the monetary tightening, where the interest rate has increased 425 basis points from the December lows. But hold on a second, why this is happening? Hi everyone, thanks for joining Market Think Tank. It's Atisham here. Lots more talk on the SBP sharp move, both from the monetary side as well as to the fiscal side. We have noticed a single day rate hike of 150 basis points along with the currency devaluations. Some say it's a prior action before the IMF program, while some say it's a price adjustment given a deteriorating economical conditions where your current account deficit, trade deficits, reserves, inflation, everything is in a bad shape. But the question remains the same: why this is happening? Assume countries works like an individual. People spend what they earn. Similarly, government spend what they earn via taxes. And the total amount of spending by the government drives the economy. But hold on a second. Whenever government spending outstrips revenue, government is in trouble. What you will do when you spend more than what you earn? Deficit, right? You create deficit, and to fill the gap, you have to borrow. This is our long-term tax collection history. And against each year, we have our respective spendings. Causes huge deficit every year. In first quarter of FY19, there is a fiscal deficit of 1.4%. And if we run with the same speed, we will be ending up around 6%. So hold on again and take a look on the importance of government spending. As we know, Pakistan economy was expanding at its highest rate for last few years. When government spending increases, it creates aggregate demand in the economy and hence causes higher demand for everything, such as oil, plant, machinery, vehicle, food and mobile phones, causes our import to increase substantially. And that's what we witnessed over a decade. Our imports are increasing day by day, but at the same time, export growth remained lackluster, causes more demand for dollar and pressure on the Pakistani rupees. As a result, country forex reserve depleted significantly. In fact, all this economic growth has come out from the local consumption, which is financed by your borrowed money. But that too will not sustain for very long, because country never built productive capacity in the economy. For example, if you borrow money to buy TV, it is for your own entertainment. Hence, it is non-productive. If you borrow money to buy tractor for cutting crops, it is productive, because by selling your crop, you have the ability to repay your loan. Pakistan's total debt and liability has soared up to $245 billion, where more than $96 billion are through external financing and rest are domestic. On all these debt, every year country has to pay some principal as well as interest on the loan. When currency depreciates, you have to pay more. Your debt servicing charges increase, and same is the case on your domestic debt. Your repayment expense increases. So hold on again. You spent with the borrowed amount because you were earning less than and spending more. Or now within your earning, you have to repay your loan. Hence Pakistan's huge chunk of revenue goes into the repayment of loan. In fact, now we want to repay. And we borrow to finance the non-essential imports. But how long can we do that? One thing to notice here is that your country forex reserve shows your ability to import. This is the historical import cover trend. And right now our import cover is less than 2 months. But I feel a deep sense of responsibility to share my personal experience. There is a common template of import cover and IMF program. Since 1993, we've been to IMF program many times. And since 2001, we approach IMF as many as Cricket World Cup. So however, Mr. Khan has said he wants to avoid such a scenario because IMF guideline will bring inflationary pressure in the economy. Because the more money they loan us, the more influence they will have over us. PM Khan has already requested overseas Pakistani to remit money back in country. And that is the main reason why we saw some minor improvement in current account deficit. How the country can get out of this crisis? Government is taking measures, but the direction is still not clear. Plan A, B, C, or no plan. We have no clue. Will they be able to get out of this situation? We have to really wait and see until the indicators start showing sign of improvement. So far, there is no clear indication. Trade deficit, depleting reserve is still the issue. So this is it, guys. I hope you got something out of it, and if you did, hit that like button and subscribe to my channel. In my next videos, I'm going to tell you the first 4-month progress of the current government. Keep watching Market Think Tank. Thank you so much.